For today's trade blast, we do our trade blast in terms of what happened and what we're looking forward to. And then part B, we actually take a look at a concept called the stock market and a market full of stocks. This is Greg for Teslafaninsight. Thanks once again for joining us. Wanted to thank you as a Patreon supporter. That's why you're getting our show today. As you know, yesterday was Wednesday, the 24th, was a crazy day. Tesla's stock price was down over 50 points, and we're in pre-market right now, so things are just sort of starting to recover. Clearly it happened. It's one thing if it's just Tesla that's getting wrecked, but it's the entire market. The only obvious thing that I can say here is it's awesome to watch the bots. Both the bots and the stop losses are really interesting tools to watch in terms of how they shape the market. So in this case, kind of what happens, and we've covered this before, is that as you hit certain price points, the bots are instructed to immediately sell out. So when you have a catalyst like increasing COVID, you definitely, and sort of not a solution to this problem, we're kind of seeing that sort of cascade where you start off with bad news, that bad news hits the stock market a certain way. That bad news triggers bot selling, which triggers a decline in value of shares, which triggers individuals who've got stop losses in selling. And so you kind of have this cascade downward of the two things working together to force prices lower. What I'm always fascinated by to watch, and we seem to be getting this once a week, once every other week right now, frankly, both on the call side or the upside or on the downside, depending on, news that's perceived to be quite good by the marketplace, et cetera. I had a kind of a long conversation with a member of our Patreon group a few weeks ago, or a couple of weeks ago, and what we were talking about is there's a concept called the stock market, and there's a concept called a market full of stocks. So what I've been consistently impressed by with certain investors, including folks that are on our Patreon group, is where they're looking at downdrafts that occur like this as buying opportunities, and the question is why. And the answer is that I've heard a lot of people discussing the fact that the market was going to crash, and I think that's logical. The question mark that comes up to sort of define what the market is all about is, let's say you take a stock or take an industry, look at the oil industry. What happened to the oil industry? The prices fell after the Saudis did what they did. And even now, when we look at the price of oil at 40 bucks a barrel, that's still enough for the Russians and Saudis to make money because their costs are in the $5 to $10 a barrel zone, but not enough money for the frackers to make money, and they need about $50 a barrel to get to break even after all their costs. So it's kind of a sweet spot for what the Saudis want to do. I'm kind of focused on oil in this case because there's a situation where as you're trying to gauge sort of where the market is, what might happen, et cetera, there's an interesting emerging theme. And what that theme is that, is the market going to crash, and what do you do regarding that? And I kind of got that feeling yesterday as I watched the prices falling on sort of initially bad news, and then we went through the cycles that I just described. And I guess what I was intrigued by was when oil was down at 10 or 11 bucks a barrel, you could, in theory, say that if you were in the oil industry or oil business, the market actually crashed for you, which it did, and the bankruptcies associated with it, et cetera, are part of that process. What's interesting to me is how, Microsoft didn't go under, Amazon didn't go under, Shopify didn't, Facebook didn't. There are all these businesses that were still viable when oil went under. So, kind of the argument I'm leaning towards is um, as we're assuming that things are horrible and let's run for the hills, the high growth entities of Tesla, Amazon, Microsoft, all these different companies that are doing great, Apple, um, people start running for the hills. And where the smart investors sort of move, I think, is they start running back into stocks that will be unnecessarily punished during these downdrafts that seem to be occurring. And they seem fairly consistently to be happening every other week. So I really think that there's some soul searching in order if you're going to be a good investor, which is can you decouple the market generally panicking because certain businesses within the market are sucking wind. For example, I'm watching Florida right now, and the spike in cases is going to make things tough for their hotel owners on beaches and so forth. And so, in theory, a Marriott and all those guys are going to get killed by COVID expanding again. So are the airlines, for example. But entities like Shopify or Amazon and other entities that are benefiting from sort of strong sales during the pandemic, it seems to me that they're going to sort of resurge and enter back into the Christmas surge zone based on people wanting to move back to brick and mortar and other things, but that's not really available. So, you know, I think the whole thing is really fascinating because it really forces you to be more disciplined in your investing and try to figure out, hey, what entities are doing fine, if not benefiting from this, and will do fine post-COVID, and how do you invest in that, particularly when people are running for the doors? Do you have the courage to sort of step in and buy? And so, I had some questions posed by Patreon folks that was discussing, what are my thoughts on sort of this sort of mini crash, if you will. And I really am fascinated because one of the rules, and it's kind of a smart one of the bots, is sell everything. And then once everything is sold, the managers can come back in and say, oh, okay, we can cherry pick the things that make sense for us to get back into and possibly at lower and better prices. But we'll do that manually rather than automated as a way to make sure that we're selecting well and we're optimizing, based on the fact that these guys are making great money and will after the pandemic. And we just need to go ahead and cherry pick those great entities that are on a nice discount. The one other thing I wanted to cover today is that I had a chance to go visit our local service facility in Tyson's Corner, sort of get a feel for how the numbers looked. I enjoy our sort of on the street show, and we're going to do a show devoted exclusive to that. As I shared, I was going to do it yesterday. Went by the facility, and sometimes it takes some time to sort of download what we figured out from those numbers. One of the things that happened yesterday that I was really surprised by is that when we're in regular times for production and at the end of the quarter, we'll have a tractor trailer arrive from Birmingham, Alabama, perhaps one every 2 or 3 days as they try to do the end of the quarter push for sales. When I went yesterday, it was very strange because I pulled up and there was actually a tractor trailer finishing deliveries. But instead of doing what they usually do is they pull up and deliver a full load of Model Ys or whatever the vehicles may be. They kind of sit next to the tractor trailer, then employees drive them to where they need to go in the process of being entered, cleaned up, and prepared for delivery. There was only one Model Y delivered. So this kind of made sense to me because I actually then saw another Model Y that was being delivered perhaps from another location to be a delivery at this location. And so it was really weird because I'm expecting to see 10 vehicles come off that truck. In essence, I saw 2. So it looks like there's a bit of a triage process going on where they're sort of distributing the Model Ys across a broader area to address the fact that they weren't able to do all the production they need to do for the quarter. So they're, sort of doing deliveries, but obviously on a limited basis. A couple of other data points that came up were, um, as I went through and counted, the number of service vehicles were high by probably 15 or 20 cars. Um, the Model 3 being the biggest vehicle in service, but I actually saw a Y out there or two. And I also, um, you know, the rest of the population of, let's say, 130 cars was Model X's and X's and S's. The other thing that happened, that was sort of data that I'm sort of trying to figure out, is that we looked in the, if you look in the, so one of the problems with my analysis is that the building that's nearest us actually has two garages that may not have the door open, so it's hard to assess how many cars are really on the delivery side of the house. So basically, we saw large numbers of Model 3s, many of them white, also large numbers of Model S's and X's that were kind of just sitting. The Model Y seem to be cycling in faster as they come in and out. I guess the feeling I had was it seemed like there were a lot of cars there. I mean, the number of vehicles on the new side of the building seemed to be in the 80 car, maybe 90 car zone, the bulk of them being Model 3s. It kind of felt like what Tesla was doing is their usual end of the quarter sort of push where they may make cars in the configuration that a lot of people want to see them, and then they put a lot of them on the ground, and then people can buy them off the street, off the floor, rather than having to order and wait for them, is one of the techniques that they've been using in the recent past. So I guess from what I'm seeing is there's very light to almost no inventory of the Model Ys, but when it comes to X and S's, definitely inventory of that. And there seemed to be an abundance of Model 3s in one of the garages that we were able to see. I'll post photos of these as well on our Facebook page, as well as we'll do a show and sort of roll those images through. But I think that what'll be more important than what I saw yesterday in terms of photos would be for us to see how things look on Sunday, let's say one day before the end of the quarter, because then we'll be able to see, did those numbers decline significantly? Are they thin on inventory, which implies that they've sold a lot of vehicles? It's sort of hard when you're doing once a month, twice a month visits to really get a flow sense of what the numbers are, but we'll sort of post photos and images and our sense of what's going on. The gut sense I had was that, yeah, inventory is a little bit light because production isn't coming in. The number of cars coming off the truck implies that there's still a lot of demand and there's not a lot of supply, particularly of the Model Y. The only sort of fly in the ointment for me is that I'm trying to figure out, yeah, I could see more X's and S's sitting around, but I was kind of surprised to see, if you add them all up, kind of a full garage of Model 3s, many of them white. And I'm sort of clueless as to why that is the case, but we'll look forward to sort of studying and understanding and sort of figuring that out as we get a chance to revisit that facility. At any rate, I'm looking forward to an update today for Tesla. I just think that everybody has to bail when there's bad news just in case, and that this gives the value investors an opportunity to come back in and grab Tesla at prices that may not be available, particularly if they make the S&P. So I'm really expecting a strong pullback up for Tesla over the next couple of days. And I'm hopeful we meet the numbers, but I feel fairly confident that Elon knows the implications of this earnings period and that we're going to get the numbers we need to make this happen. At any rate, I want to thank you for joining us. This is Greg for Teslafaninsight. Tschüss, macht's gut, au revoir, lehitraot, choda hafez. And in Jamaica, we say, enough respect, walk good. Thanks for joining us, and bye for now.